which we can see, which we can feel. These are called tangible goods. Normally, before GST, all these were covered under the gamut of VAT, value added tax. So wherever there was a product that was being sold, it was the value added tax which actually came into being. And for all intangible, what is an intangible? For example, somebody comes and does service for you at your home. Somebody services your air conditioner. So you are paying a labor charge. You are paying a service charge. So for the service charge, it was called service tax before. But now what has been done is both the VAT as well as service tax and a plethora of other taxes have been put together to make it into one single tax covering both the tangible and the intangible for entire country of India. So this is called goods and services tax. Now just let us take a look at what's happening around the world and whether GST is something which we are new to or it's the other people who have been using it. The first GST was used in France in the year 1954. So which was, almost 43, 60 years before when we started, 63 years before we started. France was the first country in the world to start with goods and services tax. Today, out of the 230 to 40 countries that are there, 160 countries, including the European Union, Asian countries, follow GST. Okay, so it is one of the, I will say, universally followed taxation systems, the GST. Now, in India, we have about 4 or more rates, the GST rate. The general rate is 18%. For food items, it is 5%. For luxury items like cars and air conditioners, it is 28%. There are 49 countries that use a single GST rate. And then there are 28 countries which use 2 rates. And only 5 countries, including India, use more than 2 rates. So we right now use, I think, 4 plus, I think 5 rates totally. So our GST model is based on the Canadian model. Okay, and we implemented this on July 1st, 2017. The first state which implemented GST was Assam. Okay, and even today, the brand ambassador for GST, that is initially, these ads and information modules, information bulletins, information, pictures and movies, come quite often because, people had to be acclimatized with this. The brand ambassador is Amitabh Bachchan. See, when did the whole process of GST start in India? It started in the year 2000 when Mr. Vajpayee was the Prime Minister. And then it could not happen during his time. Subsequently, 2 terms of Mr. Manmohan Singh, it could not happen during his time. Finally, during Mr. Modi's time. So it saw actually 4 different governments before GST could become a law in India. We have one rate, as I said, which is about 28%. But please understand, the 28% rates are the items which are there in the 28% tax bracket are very, very few. Okay. Now, having said that, India has got a 28% slab. India also has a 0% slab, which is not there anywhere in the world. Why we have a 0% slab? Because see, ours is a country which is dominantly agriculture oriented, which is dominantly still continue to be poor. So there are a number of essential items where it is not taxed. And there are items which we feel are sin items or luxury items, which are taxed at 28%. But most of the common items are taxed at around 18% or 12%. Okay. So we are, as of today, the 28% slab that we have is indeed one of the highest in the world. Now, who does the back end work? Like, of course, there has been a lot of talk about Infosys not being able to do a good job of it initially. But over a period of time, the GST website, the GST portal has settled on reasonably well. The back end or the entire IT support, software support is given by Infosys. And the total cost of the project is about 1,400 crores. And this will be operational till 2022. And it is due for renewal. Mostly it will be renewed again in the name of Infosys only. Now we come to the actual thing, what happened under GST. See, what was the problem? Why GST was thought important for a country like us? See, we have close to about 30 states. Each state had its own taxation methodology. Like I mean, Tamil Nadu had T and VAT, and then AP had AP VAT. But Tamil Nadu VAT was around 14% or 15%. AP VAT was around 18%. Karnataka VAT was around 20%. And then in some of the states, there was something called entry tax. Okay. Particularly, you take a state like Maharashtra, where if you want to enter a goods into a city of Mumbai, you had to pay something called octroi. So for any businessman wanting to sell something to another state, then there was CGST. So there was so much of confusion for a person who wanted to do business across India. So the whole idea was that using one particular taxation method, we should ensure that the entire country becomes one single market. See, you have to know that we are a federal country where the states have a lot of power and the central has some powers in terms of, defense and finance and, foreign affairs, etc. So whatever is being received as GST, compensation has to go to the states, money has to remain with central government. So a lot of things had to be worked out, and finally GST came into operation. And GST merged within itself almost around 18 different types of taxes. It merged the VAT and sales tax. It merged entertainment tax that was there, the luxury tax, the octroi, and then the purchase tax. Then there's something called turnover tax. Then it also merged within itself central duties like central excise, additional customs, additional duty, service tax, everything. So what happened is, in one shot, all these taxations were removed, and one single thing called GST was introduced on July 1st, 2017. So you need to understand, if you want to understand GST, there are three GSTs. One is called IGST, the second is called CGST, and third is called SGST. IGST means integrated goods and services tax. CGST means central goods and services tax. SGST, state goods and services tax. Suppose you are going and buying something, you are in Chennai, and you go and buy something from a dealer in Chennai. He will, suppose you are buying it for 1,000 rupees. He will give you a bill for 1,000 plus GST of 9%, CGST of 9%, which is 90 rupees, and then SGST of 9%, which is 90 rupees. So total bill will be 1,180 rupees. Okay. Now it is very clear that the central GST, CGST will go to the central government, and the state GST will remain with the state. Okay. Now it is clear that, SGST and CGST are charged when the transaction takes place within the same state. But suppose there are two states involved, state A and state B. Like I am a manufacturer in Tamil Nadu, and I want to sell to Karnataka, state B. Now, if I am going to sell within Tamil Nadu, I have to put CGST and SGST. Whereas if I am selling between two states, I have to put 18% of IGST. Okay, so this integrated GST goes to the central government's kitty, and depending on the manufacturing state, they will pass on that particular compensation to the state. Okay. So if it is between two states, it is called IGST. If it is sale within the same state, it is called CGST and SGST. Okay. Now, what are the benefits of GST? As I said, it becomes one nation and one taxation. Whole of India becomes one single market. All the tax structures remain the same. For example, if air conditioners are being today sold at 28% in Tamil Nadu, it is sold at 28% in Delhi, it is sold at 28% in Kolkata, it is sold at 28% in Mumbai. Whereas previously, every state had different taxes. Okay, so the entire market of India became one single entity, and that's a great thing because, in fact, you can say that the cross-border, cross-state transactions, cross-state trade became much higher after GST. Okay, now as a businessman, before GST, we had to deal with so many governmental agencies. We had to deal with the excise duty authorities. We had to deal with the service tax authorities. We had to deal with the state tax authorities. We had to deal with so many other people. Now today, for any taxation purposes, you have to deal with one governmental agency, that is called GST or GST Secretariat. Okay. Now, there was an apprehension that once GST came into operation, the product prices will go up. Okay. Now, frankly, that did not happen. In fact, except for those items which are in the 28% bracket, most of the rates actually came down. Okay. So I want to give you an example of between the last, before GST and after GST, how the prices actually came down, though rates are higher. Okay. Now let us just take this as an example. Now we are manufacturing a product. Okay. Now the product cost is 20,000. Manufacturing cost of a product is 20,000. In the previous regime, on the manufacturing, before you removed it from your factory, you had to pay a tax called excise duty. Okay. That excise duty, let us assume, was 12%. So 20,000 was the manufacturing cost. 2,400 is the excise duty. Now the company wants to enjoy a margin of 5,000 rupees on this product. Okay. So 20,000 is the manufacturing cost. 2,400 is the excise duty. 5,000 rupees is the margin. Now the total cost is 20 plus 5 plus 2, 4, 27,400. Now at that time, the state VAT say was 15%. So the tax was 4,110. So the product was being sold to the retailer or to the customer at 31,510. Please understand, manufacturing cost is 20,000 and it is being sold after taxes, after transport, everything, margin, it is being sold to the customer at 31,510 before GST. Now, the same scenario today under the GST regime. The manufacturing cost remains the same at 20,000. Now, there is nothing called excise duty because excise duty is now exhumed or consumed into GST. So, excise duty is nil. Okay. Margin is 5,000. Okay. Margin is 5,000. So, now the total sale price ex producer is 25,000 instead of 27,400. But look here. GST instead of VAT of 15% is 18%. This is what a lot of people were talking about. See, initially we had only 14% tax. Now you have made it 18%. The prices will go up. But at 18% tax, the tax is 4,500. The ultimate cost to the customer became 29,500. It came down by almost 2,000 rupees. So you need to understand that GST is a rationalizer of prices. Okay. So we need to understand that GST not only brought in a lot of ease in doing business, but majority of the products, either the cost remained the same or the price of the products came down. Okay. Now, these are some of the tax rates. Of course, the 0.25 is slowly going away. 0%, 0.25%, 5, 12, 18, and 28. As I said, 28 is the highest in the world, and 28% we have only the luxury items like cigarettes, aerated drinks, motorcycles, cars and everything, air conditioners, refrigerators, etc. So now, okay, we talked about GST, which are the taxes which enter, and then how did GST impact the prices and all that. Now we should know who should register for GST. Okay, now the first and very clear rule is, if as of July 1st, 2017, if you are already registered either under service tax or under VAT, you should automatically register for GST. This is the first condition. That is, if you are already under a service tax or under VAT, then automatically you have to register for GST also. Now, if you are wanting to join newly, now there are some exceptions that are given. What are the exceptions? If your total turnover, if you are a trader, if your total turnover is less than 40 lakhs, if your total turnover is less than 40 lakhs, then you need not register for GST. If your total business is only 35 lakhs, 36 lakhs, 25 lakhs, then you need not register for GST. Similarly, instead of a trader, if I'm a service provider, okay, I'm a pure service provider, then till 20 lakhs, I need not register for GST. Okay, so 40 lakhs and 20 lakhs. Now, this can again go up or come down depending on how the government feels about it. Okay, so if you are on e-commerce platform, if you are doing online business, even if your turnover is 1 rupee, you have to be registered under GST. Okay. Now, of course, these are all quite, thing like if you are a casual taxable person, like suddenly you want to go and then put a stall in an exhibition. Okay, then it be called a casual taxable person, then you have to register yourself. Okay. So how to register? There's a very simple process. This is again one of the greatest achievements of GST. Like, your physical interaction with the GST authorities has come down quite a lot. Now, if you want to register under GST, you can do it yourself. Now, only thing is you have to submit some documents online. It will be vetted. Some questions or queries will be asked to you. And then based on your answers, your registration will come maximum in a week's time. So registration process has become very, very easy. Now, what are the documents that needs to be provided by you for registering? If you are a proprietorship company, you have to provide your PAN, Aadhaar, proof of address, EB card, that is proof of having resided in that particular place, and then photograph. If it's a partnership, the details, all of the above details, of all the partners, partnership proof, PAN card, etc. Private limited company, whatever is required for private limited company. As I said, the entire process is quite simple. It's not cumbersome. And so it actually makes it sense for us to register on your own. There is no need for you even to go for a consultant. You can do it on your own. So just again, to make you grasp of who should register. If you are a trader, your limit is 40 lakhs. If you are a service provider, your limit is 20 lakhs. And there is another thing called composition scheme. It is, of course, something which is fundamental you need to know. As per GST law, every month you are supposed to submit a return. What is that return? A return showing that what are the purchases you have made, what are the sales that you have made, and what is the amount you should pay as tax. So there are 2-3 different returns that one needs to file. And actually it is quite easy, but having to maintain all the records is quite cumbersome. So what the government did is, if your total turnover is less than 1.5 crores, if you are a trader, and 50 lakhs in case you are a pure service provider, you can opt for what is called as composition scheme. So under composition scheme, most of the returns need not file. You can file one yearly return. Of course, there are some exceptions of what you cannot do under composition scheme. So again, just to repeat, if your turnover is less than 40 lakhs, you need not register for GST. If you are a service provider, that limit is 20 lakhs. Yeah. So as I said, if you are a trader and your yearly turnover from all businesses attached to the PAN is less than 1.5 crores, you can opt for a composition scheme. In this, you cannot take credit for an input credit. So what is input credit? I'll explain to you later. But one of the drawbacks of composition scheme is you cannot take input credit. But you have to charge a standard tax, and then you have to pay every month and then file a yearly return. Okay. If you are going for composition scheme, you cannot do interstate sales. Okay. And your service part can be only 10% of your, or 5 lakhs, whichever is higher, of your total turnover. Okay. You have to pay tax once in a quarter and then file just one return per year. It makes sense for people who do not have manpower to maintain records, or do not want to get into the hassle of monthly returns or quarterly returns, etc. And then, because most of the problems associated with GST comes from the input credit, because you are not taking input credit, mostly there will not be any problem. So this is more detail about that. Now, as I said, I will talk about input credit per se. Now, understand this concept, follow it a bit closely. Just 1 minute. Okay. Now, understand this. Now, Daikin is just a company. I've taken a name. Bills to a dealer called ABC Engineering. The basic price of that particular product is 10,000. And the GST is 5%. Just I'm taking for a sake of example. So, Daikin is a principal company, is billing to a company called ABC Engineering, which is its retailer or dealer or distributor or whatever, a product for 10,000 rupees. That's the cost of the product. And then GST at 5%. The total sale price, including GST, is 10,500. Now, this ABC Engineering sells it to a customer. Okay. Now, they got the basic price as 10,000. They want to keep about 2,000 rupees margin. So instead of 10,000, the basic price to the customers becomes 12,000. And the GST at 5% is 600 rupees. So the customer bill will show 12,000 plus 600, 12,600. Now, they have to pay 600 rupees as GST. But when they bought this item from Daikin, they have already paid 500 rupees. This 500 rupees is called input credit. So this particular ABC Engineering will take an input credit of 500 rupees, and then he will pay to the government 100 rupees only. So now going to the composition scheme, if here suppose somebody opts for composition scheme, he cannot take this 500 rupees input credit. Okay, so this was what I was telling you, the importance of IGST. So as we said, there are 3 types of taxes: IGST, CGST, or SGST. Now you get an input credit, which is IGST. Now I can use this IGST to pay anything, IGST, CGST, or SGST. Whereas if I get CGST, I cannot pay SGST. I cannot adjust it against SGST. Similarly, if I have SGST, I cannot adjust it against CGST. Okay, you can adjust it against SGST or IGST. for payments. Now, there are a number of occasions where input credit cannot be claimed. Okay. Now, you are buying a car for the company. Okay, you are buying a car for the owner or the managing director. Now, this input credit cannot be claimed because you are not in the business of transport. But suppose you are in the business of transport, you are a business in the of say taxi service, then you can claim credit because it becomes your business. But otherwise, normally motor vehicles, you cannot claim input credit. Okay. If you opt for a composition scheme, you cannot claim input credit. Membership of clubs, you cannot claim. LTA benefits to employees, you cannot claim. Construction, interiors, personal use products, goods lost, stolen, destroyed, you cannot claim input credit. And then penalties that are levied by the government, you cannot claim. So it is not that input credit is automatic and whatever comes to me, I can freely make use of that credit. No, it is not so. And with this is one important concept you have to know, the HSN and the SAC codes. For all products, it is called HSN, Harmonized System Nomenclature, and SAC, Service Accounting Code. See, this is why is this required? First, this tells you this particular product which is falling under this HSN falls under which tax bracket. 1. 2 is it gives data to the government about the type of business that is happening, the type of, I will say, economics that are happening inside the country. Okay, so the HSN and the SAC code are very important. See, the HSN code looks something like this. It's a 10-digit code. Of course, there are codes which are actually 4-digit, 5-digit also. Now we come to the the most important concept. What are the returns to be filed under GST? Okay, you are doing business. In a month, you are buying something where you get input credit. You are selling something where you have to pay output credit. But how do I finalize? How do I find out what I have to pay to the government? For this, there are a number of returns that are mandated by the government. The most important one is called GSTR1. Okay. Now, what is this GSTR1? Whatever business you have done during the previous month. For example, we are now in April. Now, this has to be filed before April 11th for March. Now, whatever business I have done in the month of March, I have to give bill-wise HSN-wide details of all outward sales made. You have to divide it into 2 parts, business to business, that is where the other person has got a GST number and is going to claim input credit for that. That is called business to business. And also business to customer. See, the ultimate customer is not going to claim input credit. So it is called B2C. Business to business is called B2B and business to customer is called B2C. So you have to give these details and file that particular return GSTR1 by the 11th of the subsequent month. Now, just like you are filing your GSTR1, everybody will file their own respective GSTR1. Now, you have purchased some items from say Daikin or say Blue Star or whichever company you have purchased some items. Now, they will also file their returns by 11th. Now, when they file their returns and file their GSTR1, whatever bill they have sold to you, that input credit will come and stand in a return called GSTR2A. It is auto-populated. Okay. Now you know on the 17th or 18th, you know how much of input credit you have to your account. Okay. Now the final GSTR3B. Okay. Now this gives a summary of the inward outward supplies, how much input credit you have claimed and what net tax is payable. Okay. And then you need to create a voucher or create a challan and then you have to pay. This has to be done before 20th of the subsequent month. Apart from this, if your turnover is less than 2 crores, You need not file the yearly return, but if it is more than 2 crores, you have to file a yearly return called as GSTR 9. Okay. So what is the future of GST? Now, it is possible over a period of time when we are looking at a 5 trillion economy. When we come to that level, or maybe in order to come to that level, we need not, or we cannot have so many slabs of GST. So we may have to do away with the highest level of GST, which is 28%, and maybe just will be retained for alcohol, cigarettes, sin items like that. It is also possible that the 5%, 12%, and 18% will be clubbed together to make maybe a 12% or a 13% common slab. It is something which is being worked on. See, you should know that when GST started in July 1st, 2017, there were almost about 200, 300 items in the 28% bracket. Now only about 28 remain under the 28% bracket. Sorry, 40 remain under the 28% bracket. Today, we are all talking about petroleum prices, rising. It is rising basically because both the central government and the state government are responsible because of high taxation, because it gives them a lot of money. See, let the price go to 200, still people will use their vehicles and they will continue to pay higher taxes. It is possible that over a period of time, like I said, in case we need to jump to a 5 trillion economy, we need to bring petroleum prices also under GST. And today, there are some complaints about the GST portal not being very friendly, the input credits not getting reflected correctly, confusion with regard to HSN and SCSC numbers. So all these, I'm sure, will go away over a period of time, and GST compliance will become that much more friendly. So yes, there are difficulties right now as far as the GSTs are concerned, but a lot of difficulties have been addressed. It has become quite user friendly now, but still, there are still the early days. It's just about 4-5 years. Come this July 1st, we'll be finishing 5 years of GST. So maybe it still requires some amount of, I will say, investment, some amount of maybe more radical thinking for the GST to become more user friendly. So with this, I finish my presentation. So in case there are any doubts, you can ask me. Chandra?
Yeah. Oh, dear students, I hope, right? I mean, you have been observing completely. It was a good presentation by Kumar sir, right? And it was very informative about the GST. I hope you all, I mean, followed completely about this, right? So he has touched almost. I mean, you are understanding about what is GST and when it is started. Am I right? And to whom the GST is required, and what are the various level of taxes also he has touched, right? And according to the turnover, like there are many taxes like IGST talked about, SGST, CGST, right? And it varies state-wise also the taxes. Okay, and he has touched it varies product-wise procedures when you start up and I mean a kind of new entity. What are the things to be followed, right? And even industry wise, service industry, all these things, GST in depth, the process and procedures also is touched, right? I mean, the future of GST based on the economy. I understand, right? And I hope you all collectively taken good information for your the professional career. People who are all from the background of the I mean BCom and BBA, and definitely I understand the people are showing much curiosity and taking the knowledge about GST, right? And you all really want to be in a kind of financial profession. So definitely this is the area where the startup right to get a very matured kind of knowledge which plays in the industry, the taxes. You can also become a financial consultant, right? So people who want to take up your career in the kind of financial track, right? There are many areas. So this is the one of the area you need to touch. So you attain, you will also after this the PG level, you will go for the managerial qualification also, the master's level, where you can also definitely kind of and not only the financial profession you can, and as a dual kind of other area also probably the kind of marketing or human resource or any other area, right? A kind of things you can plan it. So this is how the purpose of this webinar, right? To give you more knowledge about it, to get more matured, and you will also become a full-fledged, right? When you get into the industry, right? You are in final year, you are going to step out to the corporate level, attend the interview, probably the starting of your career, try to work somewhere. So this is all very important in the financial department. It's not specifically financial industry, one of the department in an industry, right? So do you have any questions? Please, you're all welcome.
Somebody has raised their hand.
Please
Anyone?
raise your
You
hand,
can
and
unmute
even you
yourself and
can,
talk to me.
in case if you're not able to ask, you can type your questions. Definitely will be answered. So we'll take for 5 minutes. Then based on the questions, some in additional 5 minutes we'll take.
Good evening, sir. I have a doubt, sir.
Yeah, Karthik.
Sir, if a product is going to sell to other country, how the GST bill will be bill will
GST
be
is not
invoiced?
applicable for products that are sold outside the country. See, outside
Okay.
the country, there are very clear-cut tariffs. That is, for example, if you are selling, say, one particular product to say Malaysia. Now, Malaysia has got a tariff card. It says if it is India and it is selling this product to our country, they have to pay so and so as customs duty or whatever. Okay. So the bill for a foreign transaction will not carry the GST component. It will have an entirely different way in which the bill is presented for an abroad customer. Okay, Karthi?
Yes, sir. Clear.
Thank you.
Thank you.
Any more questions?
Okay, I think there are no more questions, and I think I would thank everyone again. In fact, we started with around 90, and now I think we went up to 110.
Yes,
Now we are about 95. I think
yes.
fantastic. I'm very happy. So we are going to have a lot of such programs, a lot of such webinars to give you small, I would say, punches of information. So we are working on a lot of them. Tomorrow we have another webinar. So which actually is going to be for your, what is that webinar topic, Chandra?
Yeah, this is about career management and guidelines.
Career management guidelines, again by a very senior person from the industry. So I would request all of you to join again tomorrow and then get more knowledge and get a certificate also. Okay.
That's really great. And I also would like to share about IIKM, few words about IIKM. So IIKM, Indian Institute of Knowledge Management,
Sir,
the corporate B school. This is the one of the fastest transforming B schools and having a wonderful the ranking in various aspects actually in terms of the curriculum, in terms of the faculty members, in terms of the placement, right? All the aspects it has got a good ranking, right? And the offers industry-oriented program in various streams of management education. The IIKM is not for a profit organization driven by the passion of education and empowerment of students. It is acclaimed as the first B school in Chennai, Tamil Nadu and Kerala, which has tie-up with global IT vendors, Microsoft and SAP for high-end high ERP training. So we provide innovative and globally recognized programs that contribute to the holistic development of the individuals and society. So IIKM dedicates its intellectual resources to inculcate learning through discipline, discovery, and dissemination of knowledge. So we are on to various streamlines also. So as a part of corporate social responsibility, we take care of this kind of program that's conducting this. So thank
Yeah,
you
Chandra,
so
I
much.
think someone has raised the hand. Radhakrishnan,
Yeah.
please.
sir, I have one doubt, sir.
Yeah.
Sir, what is the difference between goods in which there is zero percentage tax rate and the goods on which there is no GST at all?
No, I mean, see, there are a group of items which are outside the purview of GST at all. Okay. Now, those are, we call it outside the purview. So we don't talk about GST for those products. If you ask me the details right now, I do not have. And then there are items which are under GST, but which are under 0% tax. That is, government tracks those things. Government tracks those items under the GST, which are under 0% tax. But outside the purview of GST, there are items which do not come under the GST purview at all. So I hope I have clarified this to you.
Sir, while showing the table, you was showing that in 0% there were items like cereals and all.
Correct.
What they will do for those items, sir? How they will show GST amount for that?
No, they will not show. It is in fact, there is another column called 0% GST. So it actually is built separately.
Okay, sir.
Okay, I think thanks a lot, everyone, and I think it has been fantastic speaking to all of you. So I'm sure I'll meet you again in some future date in some future program.
Wishing you all the best and success for your future endeavor. Good luck.